Good afternoon. This is Brian Splitt for Allendale on Friday, March 18th, 2011, with your closing commentary for the week. And what a week it was. We started off obviously sharply lower in the week with the crisis in Japan taking center stage. The liquidation began off of the news of the earthquake and eventual tsunami that wiped out nuclear reactors there, had them offline. We had uncertainty fill the market with profit taking in just about every commodity market you can see. And over the course of the week, as things kind of slowed down, the bad news slowed down a little bit, and we started to get some positive news that some of these reactors would be back up in line. We started to see some money come back into these markets, and it looks like the grains may have put in a short-term bottom this Wednesday, and really I'm going to explain how we finished up the week here for you. So May corn up 37 cents today at settlement at 683.5, and that's actually up 19 and a quarter on the week. So after all the selling that we saw early in the week, we did finish higher on the week. New crop corn up 19 and a quarter here today at 598.5, and that is actually up 20 and 3/4 cents on the week. As far as old crop soybeans, May was up 27 and a quarter at 1362.5. That is up 28 cents on the week there. And you had new crop November soybeans up 31 and 3/4 today at 1334, up 34 cents on the week. The lagging grain today was, and for the week, was wheat. The old crop May Chicago contract up 12 and 3/4 today at 723. That's only up about 4 and a quarter on the week, but it was higher. And new crop July Chicago up 13 and a quarter at 758.5, and that's up 7 and 3/4 on the week. And if you look at kind of what we've done here, we did have some positive news coming back into the markets over the past couple of days. Notably, the corn exports yesterday were back above 1 million tons, and we would have to presume that with the price break that we saw earlier in the week, that we would possibly see some very strong exports next week as well. We also had rumors that China was in the market buying corn. I think totals people had estimated as much as 250 to 500,000 tons. None of that has actually been confirmed, so we're going to be watching the news wires at 8 o'clock on Monday morning to see if any official release from the USDA has been announced. And other than that, we've seen these index funds, as we've been moving through $7 in old crop and eventually reaching those highs, the index funds were selling the past several weeks before this market even hit its top. And yesterday we did get word that the guys on the floor felt that the index funds were buying at those levels. So with the index money coming back in, that could mean good things longer term. Also, the low that we had put in on Wednesday was done on tremendous volume, the biggest volume that we had seen at that point for the May, July, and December contracts to that point. And with the high volume move, with the large decrease in open interest, we're not seeing new money coming in here to get short this market. That was people getting out. So with the funds coming back in here to buy in this sharp recovery rally, that does look very positive. A couple chart points to note for new crop corn. The low that we had this week was actually about 2 cents below the long-term uptrend from your June lows. So that uptrend was tested during this liquidation event. We held it and we rallied sharply off of that, which looks friendly. As far as the old crop corn, the lows down at 608 in the May contract on Wednesday were actually at or near several retracements points, either from the June lows. We had some swing lows in November and also a January low. And if you do some retracements off of that, you hit 38, 50, and 62% retracement of those different lows. So from a retracement perspective, this market did retrace significantly and what still looks like a bull market here. So we're going to look forward to seeing how this market trades out on Sunday night. But if you learn anything from this week, it's that a lot of people have talked about the idea of a black swan. Who could have predicted a 9.0 earthquake in Japan and the subsequent tsunami causing all this money to leave the market? But if you take anything up from it, when you get to these high levels, if you want to hold on to your cash, get some puts bought. Stay along the cash market. That's fine, but you got to protect yourself when you're up at these levels. So we do conduct marketing meetings at no cost using our position evaluator program. If you have any interest in doing that at all, please give one of the representatives a call, and we'll be happy to make time for you to do that. As far as the meat markets today, Did have April cattle up 5 cents today. That's at 111.65. June was up 2 at 111.80. Pretty quiet after a nice recovery in yesterday's market. Hogs very firm today. It looks like the April was up 17.5 at 88.32, but we had May up $1.70 at 98.35. Your June through December contracts were all up $2 plus. So very strong day in the hog markets today. As far as outside markets, looks like the crude oil settled down 35 cents. We did have a good round of profit taking mid-session when news that Libya announced a ceasefire. So that market is still trading above $100 a barrel, and we're going to continue to see very extreme volatility here as we get news back and forth here from the Middle East. Gold up $11.90. Silver was up 80 cents today, so a strong day in the metals. Cotton, old crop, was up the 7-cent limit again today, so again some confidence coming back into the markets, looking for higher risk, and they are still looking for the cotton and the grains at this point. New crop cotton up 340 here, so another good strong day there. Looks like the Dow futures are up about 135 points, S&P up about 6.5, and NASDAQ down about a point. Dollar down 41. These are new contract lows for the dollar. So again, with this dollar index making new contract lows, typically your typical relationship there. Dollar's down, you're going to see some support in commodities. But that's the summary of this very volatile week. If you have any questions or if you'd like to talk to one of our representatives, please give us a call at the office, 1-800-262-7538. And you can also check out our research at www.allendale-inc.com. And good luck trading to you next week. Thank you.